Hey guys, welcome to another trading analytics video. I'm Trade Runner, and today we're going to be taking a look at the Federal Open Market Committee's first meeting of 2023 and what it means for the market going forward. But before we get into that, hit that red subscribe button and click the notification bell if you enjoy this type of content. It really helps the channel out. And let's get to the video. So the Federal Open Market Committee's first meeting of 2023 began yesterday and is going to conclude today, with the Fed expected to release its decision on interest rates at 2 p.m. this afternoon. Now, at 2:30, Fed Chair Jerome Powell is set to speak and give his kind of state of the market address on what he expects the Fed to continue to do in its efforts to curb inflation in 2023. And a lot of investors and market watchers are expecting Jerome Powell to be very hawkish, meaning that he's going to lead towards a tighter policy and keep interest rates high as inflation continues to settle down. So this 25 basis point hike that we're expected is actually going to be the lowest that we've seen since the Fed began raising interest rates in March of last year. So this is a sign that even though inflation is starting to go down little by little, the Fed is going to remain aggressive in its efforts to get inflation back down to a more manageable level, which is the ideal rate of about 2 to 2.8%. Now, today's meeting is expected to be relatively uneventful and kind of be par for the course in terms of inflationary news, but the biggest challenge that a lot of market watchers and investors are expecting is how is Jerome Powell going to temper expectations in the financial marketplace, because investors are really excited, and you can see that in terms of how the market's performing, in expectation that there's going to be a soft landing for the economy and inflation is going to be kind of snuffed out relatively soon and lead to a more easing of the monetary policy that the Fed has been so vigilant in keeping tight over the last few months. So how is Jerome Powell going to kind of temper these expectations, right? And a lot of people actually expect him to say that he's going to keep the Fed policy tight for a while, and that just because the interest rate hikes are going down in terms of the total amount, their inflation is not combated yet. So he's trying to keep the markets down because his goal is not to see the success of the S&P 500. His legacy as the chairman of the board is going to be more about how he handled the inflationary crisis we've seen. So in fact, this rate hike that we're expecting is actually going to be the 8th rate hike that we've seen since March. So 8 rate hikes in less than a year. And it's going to put the Fed funds rate at about 4.75%. So the Fed's estimated endpoint when it announced these rate hikes was about 5 to 5.25%, meaning that we are getting very, very close to the end of these rate hikes, which would be a benefit for a lot of us consumers, because things like the prime rate affects credit card interest rates, mortgage rates, auto loan rates, everything like that. So those starting to go down over time would actually be a lot easier on our pockets, but it's going to be kind of based on how the financial conditions react to what Powell has to say when he speaks at 2:30 today. So it's a lot of speculation, but it's not expected to be as volatile as it has been in the past. In fact, a lot of people think with this 25 basis point increase that because of how much credit spreads has moved and how much the equity market has moved, and how the amount of tech stocks, how widely tech stocks have moved in the last few months, it's been a very, very good month for the market overall. And with this news that the 25 basis point hike is coming, a lot of people think that short term the market should see some sort of boom. However, anytime Fed speaks, and Jerome Powell speaks in particular, there's going to be a lot of volatility in that. So you want to make sure that you want to protect whatever your investment is, and don't take any gambles that are unnecessary at this time. Now, while inflation and the Fed has been the name of the game over the last few days, we also have some big market news throughout the rest of this week. And we have big tech earnings coming in. So we have Meta, Google, and Amazon all reporting this week. So it's going to be an extremely interesting reaction to see how those factor into the Fed's announcement today. But that being said, that doesn't mean that there's no fun behind the marketplace. So for those of you guys who haven't already, link to our Discord will be in the description of this video, as well as in our channel bio. So feel free to check that out when you guys get a chance. Here's just some of our previous trades that we've done over the last few weeks. A lot of tech heavy stuff. I mean, here's Google. We've got massive 1000% SPY trade, as well as a couple other hot stocks here. So Link to the Discord will be in the description of this video. Feel free to check it out when you guys get a chance. I've been Trade Runner. This is Trading Analytics. Excited to see what Jay Powell says at 2:30. See where the Fed expects the market to head. And until next time, I'll see you in the next video. Thanks for watching.